All right, guys, I'm on here today to teach you. I'm gonna restart that because that was possibly corny and may have made some of you click away from the video. But I'm on here today because I'm going to show you guys how to trade using the best, and I mean, like in my opinion, this is the most useful indicator or strategy, whatever you want to call it. All right, and it's the London range. Okay, it's not talked about a lot. I know ICT talked about it in like one video, right? And before you guys click away, oh, ICT is bad, whatever. Trust me, all right? Just back test this, whatever. Take everything I say with a grain of salt. But just back test this and look for yourself. And let's get right into it. Let's look at the charts, my friends. Let's look at the charts. So I'm talking about the London range, right? So as we know in the market, there are different sessions, right? We've got Asian, London, New York, whatever else, right? I think those are the only three. And these sessions last for a specific period of time, right? I think Asia is like 8 p.m. to 10 p.m. and London starts from 2 a.m. and ends at 5 a.m. And we know New York is like 9:30 a.m. to like 4 p.m., right? But I use London range to help me locate my bias and what I think price is going to do for the day. Let's get right into it. All right, let's show you all here. So the way that I locate my London range is very simple. I look at my London low, right? The lowest point of the London session, which starts from 2 a.m., which happened to be right here at 3:21 a.m. Look at this London low. And then I look for the highest point in the London session, which ends at 5 a.m., right? Which happened to be right at this resting liquidity right here that gets swept, right? Now, probably asking, okay, what do we do now? What's going on? I'll show you, and I'll tell you. I'll take you to the promised land, like ICT likes to say. And guys, no glaze on ICT, okay? I actually do not quite like him, but whatever. I'll take you guys to the promised land. All right. So this can play out three ways, right? Three ways that I've seen. Okay. So number one is what we saw today, right? Let's say we get a range formed and we trade right above the range, right after London session. We can expect for a retest later on and then a move higher, right? Our bias is we're looking for longs. We're bullish on the day. If price is trading within this range, right? Like if right here, price were to go down and kind of just do this bullshit until until market opens, then we can expect price to be trading within this range, right? With a possible breakout of the range like later on in the day, which I don't care about. I'm only trading in the morning, right? The third scenario is we could see a close lower, right? If the London low was over here and we're trading below the London low, we can expect a retest and a move farther down, right? And as we see, we got that here today, right? We make our London range right here. We end it off, right? We're trading above it. And we retest it twice, okay? Or three times, I don't care, whatever. Once over here, move up. And then over here, and then we get another significantly higher move up because this was when market opened. Yeah. And let's just go back and let's look at it more times so we can really see, okay? Let's see. So let's go back to the previous day. 4 p.m. Where's a.m.? 9 a.m. Let me erase all this. Oh, fuck. What did I do? What did I just do? Okay. All right. Sorry, guys. Bear with me here. All right. Okay, that's our London range for the day. Okay. Okay, here we are. Let's see. Get this shit out of the way, too. Okay. So we take our London low, which is right here. All right, 3:20 a.m. And our London high, which is about right over here. Right above this resting liquidity. So maybe this wasn't the best example, but like we were still bullish for the day because we're trading above the London range, right? What would have been a better confluence, right, or a better confluence for me would have been like reaching into this this London range and then like a retest and then a move higher. But let's look at it in another. Jesus, what is this? Let's look at it another day, just so we can get a better idea. Oh, Monday was horrible. I remember this not even working on Monday. Monday was the fucking worst. That's why Mondays are just choppy. They're nasty. They don't want to work ever. They just suck. Alright, so this is the London high right here. This level right here. Alright, and then the London low. So whatever, right here. We'll just say it's right here. Okay. As you guys can see, literally nothing. Like, Monday was horrible. So go back another day. Okay, Friday. 2 a.m. And then London low, and there's 5 a.m. I guess that's the London high. Okay. So yeah, this is a better example right here. Right? We're bullish for the day, right? Because we're trading above the London range. Get this massive move up here, which is probably some news that caused this. And then we get a retest on this London high right here, and we get moves higher off that London high, right? And I'm not going to bother going back and looking at it more, right? But this is just one of the confluences I use, okay? And you guys can test it out yourself, back test it multiple times, and just see how it works for you. But I love this. I love this confluence, like love with a capital L. It's one of the first things I draw out on my chart when I wake up in the morning. Go on here, plop those out, and just look at them. And yeah, I recommend you guys to do the same if you want to trade like me, right? And yeah, make sure you guys go back test this though, right? Like whatever, maybe gain some confidence with it back testing it first. Okay, the examples I showed you weren't exact, but you know what? It works. I wasn't very prepared for this video. I don't know if you guys can tell, but yeah, I mean, it works, and you guys can backtest it and you'll see. So let me know what you guys think, and any questions or concerns, leave it in the comments.